All right, chat. Let's look at the price action here. I want to focus on two things, and then I'm going to go to something that I said in the early days of this range. So remember, we had this kind of 18K go north of 20, and then just full send it. And then here we've been for almost a month. We've spent just shy of a month down at this 15 to 70K level. Okay, so this has been roughly a month's time. I know it's been very grueling, very painful. As soon as we think we kind of get our arms around what's happening, you know, oh, we have a consolidation with a breakdown. Haha, just kidding. You know, we're coming up for another test. There's more consolidation. A lot of people thought this was going to go up. It broke down. You know, from here, this is not actually any support at all. Looking back at the chart, so they thought it would go down. It went up. You know, it's just been very, very tricky if you're a day trader. I'm despite my partnership with BingX starting around the beginning of this, you know, about a month ago. So that would have been somewhere in here. I still don't think you should be trading this. I think the time, sorry, BingX, I know that's like probably hurt sales or whatever, but I'm a huge believer that this is the time to be DCing into spot Bitcoin, not trying to, you know, outplay, outmaneuver all the little degen day traders. Paradox is real. Honest question, Shaq. I'm not a trader, and I do have around 10K to invest and hold. I know timing the bottom is almost impossible, but should I wait a bit to get some BTC/ETH bags or just start DCAing in now? I think it's a great time to DCA into Bitcoin. I do not think it's a good time to DCA into anything else right now. Sorry, Litecoin fanboys. I know that's like blasphemy, but this is just my take. I think now is the time for Bitcoin. And as Bitcoin shows that the bottom is in and we're rolling over and you want to diversify your investments, you want to kind of increase the risk notch because we're going into a bull market and you think other things are probably going to outperform on the short term, that's fine. Go for it. You know, shoot your shot. But there is still a scenario out there that Bitcoin drops really hard, really fast, that all markets roll over. We'll get into that later in the stream. For now, I just want to focus on just this little instance of Bitcoin. But like I say, just about every stream, let's say there's another 16 months between now and the halving. I want to be able to DCA in every month, at least once for the next 16 months. Is that going to catch the absolute bottom? No, it's not. But does that allow me to have some dry powder in the event things go horrifically wrong in a way nobody could see? Yeah, absolutely. So if we do get some big swan dive to the downside for a week or two, I'll be able to take advantage of it before the next halving. Here's what I see now. I'm going to tell you how I think most traders see things. There's this very clear downtrend. There's a break. There's some consolidation. Now there's another breakup. There's like pretty lackluster volume all the way around. There's not a whole lot to write home about. But you know what? At least the sellers aren't showing up. We're not making new lows. You know, everything's probably up only from here. I hear a lot of this. This is kind of what's happening here. This is why the majority of people aren't screaming that we go down. Back in, probably in there, I believe I took a poll and it was like 75% to the downside. We went up, we're only up $1,000 from here. You know, this is not a crazy amount of bull, but we gone from 70% down to 50% down. So could this, you know, even go up a little higher? Could we hit 18? Absolutely. But I still think that the odds of a move to the downside are pretty high. Now, here's what I see. I'm showing you what a lot of traders see. And on the lower time frames, I've been putting some tweets out just because I find this kind of stuff interesting. I like when the market is very clearly consolidating and then going on to do a thing. But here's what I think's happening. Way back when we fell back into this range, I'm going to put on the 2-hour candles because I think this is pretty useful. I remember saying, look, here's what a lot of people do during these periods of uncertainty. You look for an actual bottom forming and a big impulse off the lows. So as a percent, this was about a 17% move to the upside, you know, low to high after bottoming. Okay, so let's say we're looking at the chart right around here. What I suggested, oh, and there's some big wicks there, but these, all right, so there's some big wicks here, but they didn't really build anything. There was nothing, this was not all that useful. It was useful with respect to later market structure, but this didn't bring the bottom, right? This did. So what a lot of people like to do is grab your channel tool, your parallel channel tool, go from the high to the low. That's it. And for the foreseeable future, this is where they live. And as this plays out, this is what you're going to see, that this is what a lot of traders have been doing. You buy the lows or short the highs, and that's kind of it. There's not like a macro move in the works. No one really knows anything. So, hey, let's just use what the market gave us. And so we can play this out. So look at how the midline's being respected here too. Now I'm going to pause this because I need to stretch this out just so we are able to see. So we tap the lows. Pausing again. And here we are. So here's what I think would be interesting. I think it would be very interesting if the market came up and actually ran these highs. And we think that's a reasonable thing to suggest because number one, the lows have been hit. You know, we've identified the highs and the lows here, right? So the lows have been hit, and look at all the interactions with the midline. If you can build a strong case that the midline is actually holding up to, like, the market is taking it serious, to the market scrutiny, this adds, the fact that the midline is being respected so well adds a lot of credence to the fact that the whole range is being taken serious. So it looks like we have a flip of support and resistance. You know, what was resistance is now effectively being support through this midline. So I think it would be interesting if this all ran to the highs before the next move, before the next whatever. Now, why that's so dangerous, in this market is if we zoom out, like what have I been saying on the macro for a long time? What I've been saying is that if the price can close back in the trade range, this would perhaps make for a really nice spring. So, you know, the macro Wyckoff consolidation theory would call for, you know, accumulation rather, something like this with some consolidation and then up in the, you know, the coming months. So something like a move up to here would be very interesting. Now, why I'm saying that's a scary move is because it's just as likely that we see something like this. So what was support is retested as resistance. Not to mention, there's a pretty clear downtrend on the macro, and perhaps that comes up and reacts and intersects off of that before the next move down. If there is, you know, assuming we do make a move down. So this is a really interesting time, just because of what the implications are of our trade range that we were talking about, which would take it back up to about 18.4. And closing above that would be a really nice build for Wyckoff. So there's going to be debate everywhere. It's going to be crazy. All right. Any questions on Bitcoin before we move on? Any other question? 19 before 10 says sedated. Maybe that would be like a nice little retest up here. I think that's a little too high. Well, it's not terrible, actually. It's not a bad guess. There's a lot of reasons to look at 19 as being the level to be retested. But I'm trying not to just get you guys only in the bear mode. Like I'm telling you, if we can show, you know, let's say there's this downtrend, right? And we get a big break above it, come down, consolidate, come up, consolidate, something like that. This 19K level would be an excellent long on the macro. That would be fantastic. You mentioned whales and algos trying to trade against each other and getting wrecked. Do you think they'll do the same one day for Wyckoff traders? I don't actually. And I had that conversation with Plan B when I told him that Wyckoff was a better tool than stock to flow. And I explained why. And he told me that, well, I can't automate Wyckoff and that's why it fails. And I said, respectfully, you can't automate Wyckoff and that's why it succeeds. This is a 100-year-old market theory we're using, and we've been really deadly with it. Not just in Bitcoin, but also in the traditional markets. So I don't know. There's the issue is there's not like a hard and fast way of doing Wyckoff. There's a sort of, there's an art to it. it's more art than science at times, not all the time. Sometimes it's very clear, the volume works perfect, you know, this lines up, blah blah blah. But sometimes there's more of like a gut feel that you have to do, and that's really hard to program in. I know AI can let's back up. Once AI is good enough, it can do anything a human can do. So let's just start there. But with what I have seen, right? This is my preface. There are programs out there that can detect and flag for a human to look at. I believe that there's potentially Wyckoff occurring here or there or whatever. But I have not seen just a hands-off. This is a gigabrain, easy trade style. I haven't seen it. With machine learning, sure. Yeah, I'm sure we'll get there. Let's look at Ethereum now. I want to look at Ethereum. I don't really know what Ethereum's doing. I don't have a great read. My issue is it did not come back down and touch support. It didn't even run the lows, right? It didn't even... It came down to about $1,100, where support was right at 1,000. And now it's doing this kind of like half breakout on really low volume thing. The biggest volume impulses we're seeing are like up here. So I've got to suspect it's doing just like we were talking about with Bitcoin, that there's effectively a trade range going on. See, I haven't built a trade range for Ethereum at all. And look how perfectly that lined up. With respect to the midline, the action at the midline, the kind of like support, resistance, support, and it's just floating up here. So could we get like this big sweaty impulse and that kind of ends the trend? I like something like that. I think that'd be pretty dirty. It'd be hard to see. Can you see a descending triangle on ETH? No. I can see something like this. If I had to pick a pattern out of any, that's where my money would be right now. Ichimoku trend lines are about to cross for Bitcoin. All right, so just a reminder, we're going to put on Ichimoku. We're going to leave it on 20, 60, 120, 30. These are the doubled settings that have a fantastic historical hit rate. If you need that one more time, sorry, I know I did that fast. Here it is. You can just clip it or whatever, screenshot it. But basically, everything's doubled. And what this does, these are the doubled settings that I'm talking about. This gives you a really high hit rate of understanding if we're in a bullish trend, a bearish trend, or if their trends are about to reverse. So oftentimes, Josh is Carpe Noctem. Let me turn price off. Josh will start getting loud when trends are reversing. Now, what you see with price, a lot of times to get this reversal where the fast moving average crosses under or crosses over the slow moving average, what's actually happening is price is kind of going up and then sideways and then down. And everything is moving like this. So the fast moving average is doing that. And then the slow moving average is like, and right kind of at the start of the downtrend, you'll usually see this crossover. So let me put the candlesticks back on and you can see how, you can see why, I guess, after a run from 10K to 60K, Josh and I were like the only people shouting, that's it, pack it up, go home, GG. Because this cross right here, which occurred at about $60,000, so it rallied from 48 back to 60, and Josh and I were the only ones that I can recall who were like, no, it's time to get out. I think Bitcoin and the other Wyckoff guys. So when I say I mean like the Wyckoff camp, along with these double setting Ichimoku camp guys, were the only two groups calling for Bitcoin dropping, being imminent. And lo and behold, we came down to 30. Now, something that Ichimoku won't show that Wyckoff will is the stuff like the infamous teleport stream, where I was talking about how when price goes back and confirms the break below, when price confirms a breakdown from Wyckoff distribution, was this up here, the conversation was how things move very quickly, and in fact, they teleport. Oftentimes, you'll see price teleport. And that was based off of not just kind of like voodoo witchcraft, but that's literally what happens each time we go up or down out of Wyckoff. So the Wyckoff accumulation range back in 2015, as we exit, we end in this sign of strength. But look at how once we left the trade range, look what happened here. Look at that impulse. That went from $300 to $500. I mean, you talk about to the moon. Sure, later that went to 20,000, but in the moment, in the moment, the exit velocity from Wycovian consolidation is tremendous. And you see that not only there, but you see it after distribution as well. At the top. Now, this is lower time frames. This looks really clean. It lasted about a month, but you can see even when it dropped down, when it was a confirmation move to the downside, it was minus 32% in 2 days. And so that was the whole basis of my expectation going into, you know, as we break it down from Wyckoff. I'm sure it'll potentially be about a 30% move or more, and then in a single day, it was a 30% move. So pretty wild. I love backtesting that kind of stuff and seeing how it works out. But that was fascinating to me. So the same thing could potentially be at play here. Again, I am bearish. I am macro bearish, and I think we're still going down. But if I end up being proven wrong, and this in hindsight is some really nice Wyckoff accumulation, then as we leave, expect something similar to happen. Big sweaty move, maybe up to 35. Before coming back to 25 and consolidating. So something like that for a period of months, like for 3 or 4 months before finally moving to the upside. Now, again, I'm not a big believer in this, but if we break back into the range, which is anything up here, anything north of, like, let's call it 18 to 19, somewhere in here, then I got to take that scenario serious. I can't just ignore it. And I will have to plan accordingly. Isn't the 50 and 200 EMA pretty much the same as the itchy settings? Let's look. All right, so intermediate is 50, long is 200. So 5,200. Here's your 5,200. And you can see this is EMA now, 5,200 daily EMA. These did not cross until the bottom. This actually, the death cross here marked the bottom, which is hilarious to me. This is literally the bottom wick of the summertime, the bear market summer. Oh, you just meant in respect of like a death cross is bad and a golden cross is good. Yeah. It's just like a way of kind of knowing what's what. Whew, ugly. If you're new to the chat, guys, I'm going to tell you a ghost story. This is my worst case scenario down here. 4K-ish. This is my doomsday scenario. Spend a year consolidating. Send it. And I'm very much in the minority on that. So back to Ichimoku, though, you want to... A buy signal is when the fast moving average crosses above the slow moving average. So blue over orange, like blue on top of orange. And then it's even better if it's above the cloud. That's like the best. That's the most bullish scenario you could possibly get. Here we're below the cloud, and the slow moving average and the fast moving average is very far apart. So there's no buy signal. Now back in here, you saw a buy signal and a sell signal, and then a very quick. I don't think he's actually crossed. Did zoom in. Maybe a buy and a sell. I don't know. However you want to do it. But I don't really use this personally. This is not a way that I trade. I use this as a way to kind of gut check and double check what I'm seeing on the Wyckoff side. A lot of people think that nothing can hurt Bitcoin as much as the FTX fiasco. Therefore, the bottom is in. Yeah, that ain't how it works. You know what else is down here? You know what else is down at this level? He's publicly put out a thing talking about $3,500 to $4,000 Bitcoin is when he's in trouble. Reminder that I didn't just pull this out of my rear end, this level. This is based off the last time that we had a pandemic and all markets came back down to their... So there was a pandemic announced. All markets sold off. This is back in the 1920s. There was followed by a face melting bull run, followed by distribution. And then on the other side of it, all markets retraced. They gave back all the gains from that initial panic, the bull market, and then all the way back down. All markets retraced to their pandemic lows during the maximum fear. So that would be this is why we're even talking about this as a scenario. And then everything else is just gravy. The fact that Sailor stops are magically right at that same level and all this other stuff. I just think it's super interesting. Where do you think the Dixie will bottom? Because I think we're in the bottom process in Dixie. Let's look at Dixie. We haven't looked at Dixie in a while. And then we'll look at Litecoin and a few other things. Well, I was hoping we get some consolidation. We really didn't get that. So I'm going to go ahead and delete this. We didn't get what I was looking for. Here's my thing on the Dixie. Historically speaking, the Dixie likes to do its thing for like 8 to 12 months before it finally rotates over. Now, this went parabolic and broke down in October. So the Dixie broke down from going parabolic in October. There's not been a scenario where we've just broken some sort of trend, you know, like the inverse would be something like this. We didn't just go up right here. No, we rallied back, consolidated, and then went. So I'm wondering if something like what happened back in here, I'm just not sold on us just instantly sending it. Like, what if we did something like that? Where this is the ultimate, the final stop. Wherever it bottoms out, I don't know, find some support. Something like that. I don't know. That's just what happened before. I'm just not sold on an insta reversal. Because the history of the Dixie has taught us one thing, that it just doesn't insta reversal. It's not a thing. It goes up forever and then consolidates. Or it goes up. This is a year. This right here, this little moment in time is a full year. This is from July 17 to May of 18, another year. You know, we got this little trend, and then all of a sudden deviation of the trend, but it didn't break down. It didn't go to the moon. It consolidated. Like, even the start of that to the final breakdown is March 20th to July. Wait, no, I said that wrong. Yeah, March to July. Sorry, March to July. So 6 months or something after all this deviation. So I don't know. We'll see. I'm really not sold on this being. There's a lot of people out there that think we're just doing this. Buy Bitcoin, buy everything you can because we're just doing this. I just don't see it yet. I just don't see it. Now, I don't have a great read on where we are either. Like, I'll be completely straight with you. But it would be the exception, not the rule, for us to just full send reverse. This is kind of interesting to me on dominance. This caught my eye earlier. I need to tweet this out. Kind of looks like an Adam and Eve, right? If this did break north, these are the kind of the two areas I'm watching. What's effectively this midline, and then this high where the market continues to roll over. But I do think it'd be even more interesting to come up to this like 60% range area. VIX as well is near the bottom. Let me show you something kind of interesting that somebody showed me. I think you guys will like this. Speaking of the VIX. So the VIX is the volatility index. It's basically a way of visualizing fear in the markets. All right, so on the bottom, I'm going to show you what happened leading up to 2008. 2008 is like the great financial crisis. Man, I can't line it up just like I saw it. I can find the actual thing and then tweet it out. But this was the punchline, okay? You effectively had this trend broken. Effectively had a trend broken. You had one punch down, a rally up, another rally down. So this was like the conversation. This was on a Twitter thread I saw, and I thought that was super interesting. I don't know. We'll see. The VIX doesn't trend. What do you mean the VIX doesn't trend? The VIX trends all the time. Hold on. Let us test this thesis, sir. Is that accidental? That's an accident? That's not like a compression breakout with the retest? No shot. Which is really funny because there's like a million little individual instances inside of it. You see this? Now, I'm not rushing out to trade this. I think it's like probably not your best way of trading anything. There's probably a lot better assets out there to trade. But I was just showing how this lined up to the 2008 crisis. 88 or Sol? All right, so chat, we're kind of done with the Bitcoin Ethereum stuff because not a lot has happened, truly. So I did want to go over just super quick the oil chart because it's been super interesting, because it's all gone according to plan basically. You know, we talked about for a long time this right angled ascending channel, right angled ascending channel, right angle, and the fact that the lows are relatively equal. We have 3 equal lows, and then ascending broadening wedge. That's what it is. Right angled ascending broadening wedge. That's a fun one. And you get these highs kind of rolling, a big blow off top, support tested, failed to continue, call it a double top, call it consolidation, whatever you want to call it. But once we fell back into the range, this was the signal, kind of the bat signal. And I do suspect that we're going to see the price all the way back down to 61. And then what? Perhaps breakdown, perhaps roll off or retest. I don't know. But the trade was going, the expectation was to go from, once we fell back into the range and retested the trend line. So basically that's why I have this area kind of circled. Somewhere in there, the expectation turned to anticipate a drop from 100 down to 60, which did not match sentiment. A lot of people were like, oh, this is going to go to infinity. Like, how do we heat our homes and stuff like that. Sup, can you please look at this little coin, MBS? You know what? I'm going to, because I'm just in the mood for something I haven't looked at before. MBS on USDT. Chat, we'll go over anything you want to look at here in a minute. MBS, dude, I don't see MBS anywhere on trading. It's got to be on TradingView. Chat, who sees it? Before I do anything, who sees it? What is it? Center punch. You're going to see why. You're about to find out. Chat, what is this? What is this? Flux. Oh, hello. Flux, you nailed it, dude. Redistribution. Redistribution. You are here, sir. So the anticipation is this part. Markdown. Markdown leads you to the next range. This is a range. This is the anticipation that this is a redistribution. The reason it's redistribution is because you have a period of time where it effectively trades sideways, where near the end of the range, there's a big breakout. So you see how this takes place, not up here, not at the beginning, not in the middle, but right here, kind of near the end, after a consolidation since May, it looks like. Jeez. Consolidate, high, low, big sweaty breakout with an immediate return to the range. The trade here, as always, is watching for a close back in the range and next stop being the low. So that's the trade. High to low, and then waiting to see what happens next. In case of redistribution, you wait for a break and a close of a new low, and then, you know, continue your short. NFA. That's just how a redistribution is typically played. But again, this is the telltale sign. The upthrust after distribution is a huge deal. All right, next up, y'all wanted to look at Sol. Suck it. A bunch of leeches. All right, so we had a descending triangle that broke down. You know, we've been talking about $14 since back when the market had, when the price of Sol was $178. Now, there's a couple other levels that are catching my eye based off of the technical analysis and the based off the 1.618 extension and the measure move. Those two levels are this kind of $8 to $6. And that a lot of that is based off what's happening in here. But if you look at where the volume profiles tell you to look out for, and if we're just like honest with ourselves of what happens a lot of time with these first cycle coins, this is like the $1 mark. I think it would be super interesting to come down to this level, this like $4 level. Now I'm not marking it because I can't measure to it. There's not a technical setup for $4, but I just think it would be interesting if you come back down, you know, to what this level was, the extension of this level, which is like $3 or $4. This is where we get into more art than science. I just think it'd be cool, but at the end of the day, we got to see what the market wants us to do. Unfortunately, breaking down from something like this means that we're likely, you know, a year or more away from any real good sign of what's happening on the macro. This needs a lot of just jabate, just whatever, sideways, and then the next bull market, it can send it. That's fine. I fully expect something like Sol will do great next bull run. You know, let's say 2025, late 2024 into 2025, which is my just complete guesstimate on where we have another bull run. But between now and then, it's anybody's guess. Now, if you're thinking about like selling your bag because you want to rebuy at 6, I think that's a bad move. The way to think about this is you've already missed 95% of the drawdown. You've already missed a 95% drop. Do you really want to play some like, you know, potentially lose all your money by getting chopped up for that final 3% or 5%, whatever it ends up being, the final move to the downside? I know it's 50% potentially from where it is today down to $8 or $7 or whatever. I get that. Like, I'm not arguing that. But the big picture is what you got to keep in mind. You've already missed a 95% drop. To go down to these levels is just another 2% from the highs. You really want to, like, this is not the time to try to, like, oh, now I'll sell. Now when everyone's bearish and everyone's scared, now is when I'll sell. No, now's when, if you're in these positions, you're either in them because you believe them. Everyone else has been shaken out. The unbelievers have been run off. So you're either lowering your cost basis by continuing to add to your position at lower prices, or you're just sitting and waiting for 2025 and you just write this off as a loss. This is not money you need to live. You know, you don't need to use this to live. Hopefully, at least that's what you should be doing. But I like Sol for next cycle because there's so much hate thrown at it right now, and it got so much like headline news about this is broken and that's broken and everyone should sell, and FTX supported it, so it's going to go to 0, and it's still kind of, it's not dead, you know what I mean? So even if it goes down to like $5, I'm going to build a little moon bag once things look really, really nasty. There's a level on the chart for me where I'm like, all right, I'm going to buy a little bit just to see. Because I watched something go from $1 to $250 and back to like $5 or $4. Yeah, okay. Okay. Oh, you know what I do see that we haven't covered? So here's the implication, though. The implication is that this is bottom. This is Sol on the Bitcoin pair. Potentially bottom. Potentially bottom. Now, here's what I do have to point out is that this lower level, which is support. Support was barely touched and then it rallied. Support was touched and then broken a little and then rallied. Support was completely broken and it's consolidated below the break. So it's getting a little bit like a little weaker. This was strong, a little weaker, very weak. So to me, this is, it almost looks like this is going to break and do the next thing. Or like rally up and do the next thing. Whatever it's going to do, this is a sign of weakness with respect to what happened back there. So this is not something that would make me very excited. This is how we, I don't trade in bear markets. I just think it's kind of a waste of capital. It's like on the crypto side, if you want to trade like gold or whatever, that's fine. But the liquidity is so bad in bear markets. You're just going to get wicked out of anything. If you have a stop at all, you're done. But we will still monitor everything. And this has all been very interesting to pay attention to. The other thing is, this is Sol in the Bitcoin pair. These lows, I fully expect them to get run before the next move, whether it's up or down or whatever. Like, these lows have to get run. No one gets a free ride. You're telling me everyone had a stop down here right at this level? Oops. And it just came down, it got within like a pixel of running it, but it didn't run it? No shot. No shot. That's getting run. Just a matter of when. Oh, we gotta, all right, let's look at Litecoin and then let's look at Doge. So Litecoin is interesting to me because look what it's doing. It's like refusing to break down. This is the daily chart. This is really strong. It's come down, it's built a range, it's rallied up, and it is consolidated above the range highs. However, we do not want to see a single candle close back in the range. You can see how the last time it attempted to, it closed. There was a big battle back. That's what this long-legged response by the market right here said. Nope, we are not closing back in there because the powers that be understand what the implication could be there. You do not want to see an upthrust after distribution occur, because then you'll very quickly get something like this. So keep your eye on what's happening with Litecoin. It could be a canary in the coal mine of sorts. It oftentimes is before next big moves. If you start seeing Litecoin show weakness and close below, like for example, I'm going to do a right click at $72 and I'm going to do add alert, crossing $72. Look out. And then I'll get an alert on my, like I have an Apple Watch and it's connected to TradingView. I'll just be going about my day and I'll get a little bzzz, and it's like $72, look out. I'm like, whoa, and then I can jump into action. Quad U is still my favorite Wyckoff accumulation setup of the century. I am attempting to add to my positions. I am long Quad U. This is one of my favorite setups, long-term setups. And I am attempting to continue to build my positions either here but I'm doing it slowly because the sign of strength is potentially going out into 2024, right? This is like a long period of consolidation, but it could easily morph into a sort of bull flag before the breakout as well. So I'm always looking for an opportunity to be a buyer somewhere in this zone, like at the range support, kind of act as a retest of this level. So whatever happens, I think this is the most likely, but I'm open to the idea of it coming down to like here and then rallying. We've seen other assets behave in that way before. We can't rule out that this could do something similar because we've seen it done. This is where we come back to more art than science. Look at how this was set up. Like your traditional Wyckoff setup would like completely ignore this. It like once you see this, you're like, oh, it can't be Wyckoff because of that. That was very interesting. That Neo, this was one of the few coins that showed Wyckoff accumulation setup. And now look at it. Now look at it. It's all the way back to the accumulation lows and breaking down. Holy crap. This is another great example, Neo down here, as to why we want to identify Bitcoin distribution and get out of all our altcoins during Bitcoin distribution. Because if you get caught, boy, you get caught. You round trip it. And then some. All right, so you have a really nice inverted head and shoulders. So I'm gonna measure that all out. So you have a neckline. So there's two measurements I always take. One is the 1.618 extension. That's that. The other is the measured move. And then gives us our buy or sell zone. Okay, so here is the measured move. That makes this the sell zone. And you can see kind of what's happening here. Worth pointing out, there was an attempted break down. You see that? You see how the market started to go parabolic to the downside? And it just like Chad shoved above it. So what I would likely do, I would be selling. This is what it looks like. It looks like some algo or TWAP or whatever is exiting at this level, at this 1150 level. And again, this was the 1.618 extension level. That's what this was. This was the measured move. And between them, we call that the sell zone. I would be looking to exit at any point in here. I think you kind of missed the move beyond that. Now, there are times when things go straight up. Sure, I get that. But you can kind of take it a day at a time. Like if you're exiting at this level, if you're exiting at 1150 after being long from 750, you can kind of protect all these profits. And then if suddenly you see a new setup, like let's say you see it rallying and kind of doing a falling wedge and then starting to break up, well, that's a new setup. Now you're long from 10 and your next target is up here. It's a whole different thing. But for now, this trade had these targets and it's at them. So it's like, okay, now what? That trade is over with. Now we look at the next thing. Doge. I want to look at Doge. I hadn't noticed this trend. This is Doge on the dollar pair. Why is this different? Oh, I just missed it. I just wasn't paying attention to it. Huh. It's hard to see on the candles because there's so much volatility. Can you look at AMD? Grateful Dad, what's up? What's your homework? What's the homework you want? You guys want homework? Okay. guys are psychos. All right, let me look at AMD and then we'll talk about homework, I guess. Oh, they're sick. Measure and move for that head and shoulders at the top. Fib retrace. Sell zone. In it. Whoop. So that's this trade setup. Concluded. I realize there's like a lot there. It's a lot of visual noise. Sorry, let me make this clear. All right, so that head and shoulders top had a 1618 extension target and then a measured move, and it's down here. So this does not mean like, oh, okay, well now we need to just full send it up. No, that just means that particular trade in a bubble is completed. Like the trade's over. The next thing is unknown. There's not enough data for the next setup. This took from August of 21 to April of 22. Okay, that took that long for this move. So now we need something like that. Now we need, this long for that move. You know what I mean? Like, we just don't have the setup yet. No, we can kind of what if our way to death with all this, but we don't have a setup. There's no setup right now. There's kind of an easy way of looking at this and drawing like a channel. I think it's respecting a channel pretty well. Like you can just see that with your eyeball. So I would just extend this out for now and just see how it goes. I also think it's super interesting that these lows were run. That's a great start for a reversal. But remember, I'm a big believer of the March 2020 lows being run. And for that to occur, that's effectively this yellow horizontal line. So will price come all the way down and run the pandemic lows, which is at about $36? This is a separate analysis from the head and shoulders. I think it's also interesting there's a key horizontal there. Come down, run it. Consolidate for 6 months to a year. Send it. I think that would be interesting. And I suspect that's what we're seeing across the board. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. I'm not your bear guy telling you to sell.